Good morning, ladies and gentlemen, and welcome to the show. Looks like this is the last show I'm probably going to be doing with this phone because I got a new camera coming. But anyway, let's take a look at what's going on, and let's see. Today is August 9th, 2019. It's a Friday. And you know what the next target's likely to be for China in this trade war that's going on? Well, first, they've said that the United States has said that they're going to take $300 billion worth of Chinese goods, and they're going to add 10% more tariffs to these goods. They haven't done it yet. So China's not likely to retaliate until after they do it, after the United States puts the 10% on the $300 billion worth of tariffs. And then the next target's going to be, well, let's get the chart started right. Let me see, right here. It's a little bit difficult to look through this phone. It'll be much easier when I get my new cam. Anyway, U.S. oil likely to be China's next target. Okay? You know what China's been doing? They've been shipping oil in from Iran, and tremendous quantities. And Iran, they got all kinds of oil there. It's an oil-rich country, And the United States needs to sell their oil, And so this could create a glut on the market. It could also lead to more sanctions against China and China against the United States. This could be the next step in the escalation of this trade war. And this is the most likely. It says oil is likely to be China's next target as the trade war rages. This is what the energy analysts are warning. And I think this is probably going to be their next target. I think they're right. I think this is going to be, and so we could see, if China starts importing a significant amount of Iranian oil, we could see an oil price slide, but this is all part, and also with the recession coming in, there'll be less energy, people do less things. People have less money. There's less jobs. Less oil's needed in the world, And the United States is producing more and more oil all the time, And so this is what's going on with that. Let's take a look at the markets now, and let's get started. And let's take a look at the silver price today. Silver's done awfully good recently, and so's gold. Slid a little bit, backed off from $17, and now it's at $16.88 today. 16.88 bid and 16.98 ask. I don't think it's fallen that much. It's just following the basic pattern it's been following in its range. So later in the afternoon, we might see it go back up and crest above $17 again. I wouldn't be a bit surprised, let's put it that way, to see it crest above $17 later this afternoon. Let's take a look at gold. Gold is $14.97 bid, $14.98 ask, and gold's starting to ease its way up a little bit too. It's heading back up toward $1,500 again. Probably later this afternoon. I wouldn't be surprised to see it crest above $1,500. Let's take a look now at cryptocurrency. We're looking at $303 billion in this market today, and Bitcoin dominance is 69.6%. Bitcoin dominance just keeps rising up higher and higher. I'll tell you, that makes me a little bit nervous that the bears might be more active than we think in the Bitcoin and cryptocurrency space right now. I like to see the altcoins strong, within cryptocurrency. And when Bitcoin's really, really strong like this, it makes me a little bit nervous about the marketplace. Anyway, I'm expecting this Bitcoin dominance to slowly climb, But then, a couple years from now, it's going to back down again, But that Bitcoin's going to be worth an awful lot more money than it's worth now, a couple years from now. Let's take a look at the Dow Jones Industrial Average now and see what it's doing. We're looking at down 11 points, but let me refresh the page. Down 91 points. So you can see the volatility right now. I'm going to tell you what. It would not take much at all right now. Wouldn't take much at all for the Dow Jones to have a big sell-off. It could happen at any time now. We're in that place right now where investors, and this world recession's getting ready to start, and the market, it's been pumped up for many years. It's way oversold, and we could see it could start at any time really with the market. Any little thing could set it off now at this point, because investors they're not quite realizing what's coming just yet, but they're getting there. They're seeing that this doesn't look good, and we're not in the same boat that we were in maybe even a year ago, Let's take a look now at crude oil. Now, it's had a little tick up, but this is probably just temporary. It's up 3.75%, It's at 54.51 for sweet light crude. Let's take a look at U.S. Treasuries, the Treasury market. Let me close the chart in just a little bit here so we can see it better. We're looking at the Treasury market. Most yields are down except for the 3-year and the 1 month and the short end, the overnight. Everything else is yields are falling. We're looking at not huge moves in treasuries today, but a fair little move in the 30-year. Looking at 2 basis points in the 30-year. So that's one of the ones that's moving the most, is the 30-year. And the 30-year's been the only holdout in the treasuries. It's the only one that's held out from the yield curve inversion. It's getting awfully close. In fact, even as I'm saying this, I'm not exactly sure. It's so close right now, I'm not exactly sure if it's not a full-scale yield curve inversion all the way up to the 30-year. I'm not sure yet. I mean, it's so close. If it just drops a few more basis points, I know we'll be there, and we'll have the full yield curve inversion all the way out to the 30-year, which is a really huge sign that the world's going to go into a recession very soon. Let's take a look now at dollar index. 97.55. Now, China's got an awful lot of moves that they could do. I'm going to turn the charts off right here. And there's an awful lot of things they could do. There's a rare earth minerals. And also, we got this oil. They can actually put sanctions on U.S. oil. And they can start importing Iran oil big time. What they've been doing is loading up on Iran oil, and they haven't really been importing it because they don't want to really anger the United States. They've been holding it in tanks, like in their ports, and they got big tanks like in there, and they also got ships they can hold it in. And they've been stockpiling it, but they haven't really been selling it into China yet, so they can't officially declare that they're actually violating sanctions at this point. But as the trade war heats up, China might get to a certain point where they just don't give a damn anymore, And they're looking to get even and stuff, and that's when they might actually start importing this oil in and start using it, and sanctioning the United States oil coming into China. China's a huge oil. They use an awful lot of oil in China. Well, most of the products they make and everything use oil in them. You'd be surprised with how many different things that oil is used in the world. This is actually an oil-based economy that we have. And oil is almost it's gold and oil, really. The two things that underlie the economy and are actually support. They're like, if you had a building, what would be the foundation underneath it? And our foundation of our entire economy is oil and gold. Seriously. Those two things. That's the value that underlies our economy. An awful lot of derivative products and everything are based off of the underlying assets. Well, the derivatives have expanded. They make it seem like we're much richer than what we actually are, because they're derived off of the underlying assets. And, when you hold a piece of gold in your hand, you're holding the real asset. There's no counterparty risk attached to it whatsoever. Whereas if you're holding a derivatives contract based off of that asset, They've just basically expanded the quantity of the asset artificially through paper. Anyway, listen, thank you guys for listening to this market report. Give me a thumbs up, and we'll catch you. Listen, I'll do a report this weekend, most likely. And then we'll catch you again Monday, and we'll see you guys later. Bye-bye for now.